Ja, hallo liebe Börsengemeinde, Michael Adams hier für Stock-Telegraph und ich hatte ja am Dienstag dieser Woche, das müsste der 24.10. gewesen sein, habe ich Ihnen ja die Kerr Mines das erste Mal vorgestellt. Wirklich sehr, sehr interessantes Unternehmen und ich wollte eigentlich darauf warten, dass ich mit dem Claudio, jetzt muss ich gerade mal gucken, Claudio Ciavarella, genau, Claudio Ciavarella, ja, sehr schöner italienischer Name, dass ich mit ihm erstmal ein Videointerview machen konnte, ein CEO-Roaster, bevor ich ihm das Unternehmen vorstelle. Aber dann hat das Unternehmen sich entschieden, dann am Dienstag einen Newsrelease rauszugeben und das war dann für mich der ausschlaggebende Punkt, dass ich in das Unternehmen oder dass ich diese Vorstellung vorgezogen habe. Nichtsdestotrotz hatte ich allerdings am Mittwoch, das war dann der 25.10., die Gelegenheit, mit dem Claudio zu sprechen und ja, ich verspreche, glaube ich, nicht zu viel. Ja. Das ist zwar ein relativ langes Interview im CEO-Roaster-Style. Wir gehen durch die Präsentation durch, aber der Claudio hat da so ein paar Knaller gebracht und ich denke, dass ich mit der Kerr Mines, die an dem Big Board in Toronto, also an der TSX, nicht an der TSX Venture, also direkt an der TSX notiert unter KER, Kaufmann Emil Richard, ja, drücken Sie mir die Daumen, aber ein wirklich sehr, sehr, sehr gutes Unternehmen gefunden habe, was uns auch sicherlich im Rest 2017, aber insbesondere auch im kommenden Jahr 2018 richtig Spaß bringt und ja, wenn alles gut läuft, auch entsprechende Performance für unser Portfolio. Ja, in diesem Sinne wünsche ich Ihnen, nehmen Sie sich am besten einen Kaffee. Ja, wie gesagt, wir sprechen fast eine Stunde. Nehmen Sie sich einen Kaffee und ja, schauen Sie sich das wirklich bis zum Ende an. Ich verspreche Ihnen, es lohnt sich. So, hi Claudio, thanks for taking the time to talk to me. I know that you're just back from a site visit on the project and maybe you can fill us in there, but as a start, yeah, maybe give us a little bit of background on yourself. So what's kind of your background?
Sure, thank you, Michael, and thank you for taking the time to talk to me today. My background is I'm a professional accountant. And a private business owner. I built 3 highly successful businesses here in the Toronto area, one in construction, one in manufacturing, and one in real estate. Okay. And I've been a long-term investor in the precious metals industry. And in particular, I've been a long-term investor in Kerr Mines, going back probably a good 12 years now. And I was given the role of, I took the role on as CEO back in April of this year.
Right. Yeah, that's what I read. I went through the presentation already. And yeah, but coming back to the site visit, so how did that go?
Site visit went extremely well. I went down last week for a few days. The project has a lot of activity. With the drilling, both surface as well as underground program, as well as the underground mine development that is happening. On Friday, the entire board arrived and we did a tour with the board, went underground, went into the new development area. So everything was going really well. Everything is moving very well. I went through you know, our geology team is looking at all the core and you know, all the different things that are happening there. So it was quite exciting time. Okay, yeah, cool. Just for the guys that are now watching and don't even know what we're talking about, right? So Kerr Mines has a kind of historic production mine in Arizona. Yeah, it's high grade and historically they produce something like around 500,000 ounces. And you are doing kind of the refurbishing to bring it back into production. That's kind of the basic picture, right? Yes, we acquired the project in 2014 during the mining downturn. And what we liked in terms of Kerr, in terms of our flagship asset, the Copperstone project, is located in mine-friendly Arizona. The project is, we purchased it for the following reasons. In addition to being in a safe jurisdiction, the project was a past-producing gold mine, produced over 500,000 ounces through an open pit operation. The mine is we're fully permitted. All the permits are in place to progress once we move to a production decision. We have extensive infrastructure on site, and we'll go through this in the presentation in terms of the details. We have an existing high-grade gold resource that is located directly right underneath the open pit where the previous operator completed. And there's significant underground development that's been already done, close to 50-60 million US dollars that's been invested in infrastructure that we're actually going to be able to take advantage of as we move along. And there's a significant amount of exploration upside, and that's what makes sort of our project unique in terms of all of these positive factors.
Okay, cool. Yeah, so I'm not a geo, but I think geos will tell you, kind of geo wisdom, yeah, that the best place to find a new mine is beneath an old existing mine, something like that, right? Anyway, true. So
yeah, that saying, I've heard it in a few different ways, but you're right, and we have, well, the nice thing is we have an existing resource already, a historical resource that we have, which gives us a really good leg up in terms of the process.
Okay, yeah, let's just move forward in the presentation, and then we see what else comes to the table.
Okay, so I will just turn some of these pages here, so that way we'll flip along, and we'll start off at the first page here. So just to give you a little bit of the overall view of the project, I've kind of gone through the fact that, you know, we are a low-risk project as a junior miner in the gold space because of the different factors that I've already gone through. The fact that past producing, existing high-grade gold resource, you know, in Arizona. We have our production and environmental permits in hand. We have significant capital that's been invested. You know, from a near-term upside point of view, we are currently in phase 1 of our exploration program. So in terms of our resource expansion, phase 2 is a program that we are working on currently. We are currently developing phase 2 of that program. One of the key milestones that we have is to come out with a pre-feasibility study at the end of Q1 of 2018. And on the back of that, we'll make a production decision. We have, as I mentioned, we have tremendous exploration potential. We have a significant land package, just under 12,000 acres. And that includes really 5 significant exploration targets. There was 6, but we had a nice press release yesterday that sort of moved on.
Yeah, that I already covered that yesterday. Yeah, for my readers, I did a quick write-up, yeah, and it was kind of an emergency, yeah, because I wanted to wait for our video interview before I do my first buy recommendation, but then you came out with a news release yesterday, yeah, with these drill results, and so you kind of forced me to do it one day earlier, but anyway, it's all good. So I brought my guys in at 26.5, yeah, yesterday we closed at 28, so that's all cool, and I don't know what the market is doing today, but that's just, who cares what it's doing on a daily basis, right? So my objective is to find, as you pointed out, yeah, for my readers and viewers here, to find low risk development stories, yeah, that are close to production, yeah, and that's actually what you are. This is what attracted me especially to the company. And yeah, you said, yeah, you came out with some really good drill results yesterday. I'm pretty sure that you're going to go into more detail later on in the presentation. And yeah, and by the way, you're trading on the big board, yeah. You're not a venture company, and this was something I saw when you already have measured, yeah, it's measured and indicated resources. It's not inferred and indicated, right?
Correct. That is exactly right, and that's why. And you know, Michael, what you just said is exactly accurate. You've hit the nail right on the head. We're a low risk, you know, near-term production story located in the USA, good jurisdiction. And we have an existing resource, exactly. It's measured and indicated, and you know, our program and our objectives are to continue to drill that out because we believe that there's a significant exploration upside to that base resource that we have. That is correct.
Okay. Cool.
So just carrying on in terms of the sort of just to review, you know, as I mentioned, I just took on the role of CEO, and really, you know, in terms of moving the company forward, is really just begun over the course of the last 5-6 months. and we built. I hired a president, mining engineer, excellent background, fantastic experience, 25 years of experience, very capable, has brought mines into production. So exactly the skill sets that I was looking for. He's built a fantastic geological team that obviously, as you can see from the, as we talked about the results, they've quickly, come to a process of understanding the ore body, and that process will continue to grow as they gain more experience with the ore body. So we're very excited about the team we've built. We have a very supportive shareholder base. As you know, I'm the second largest shareholder of the company, and our chairman is the largest shareholder of the company, which is great. It's a very unique situation from that point of view. From a risk point of view, the board and the top two shareholders are highly aligned in terms of the success of this project, and we're very committed to seeing it succeed. And we had a good support with our first fundraise back in July which was specifically for phase 1 of the exploration program.
Okay, I think you raised 8 million Canadian, right? So, let me ask you a question, because your chairman, who you pointed out as being the largest shareholder, you being the second largest shareholder, is a guy or businessman from Saudi Arabia, right? So how did this connection? It's kind of an unusual connection. Most of the time, the Canadian junior companies are backed up by Canadians, Europeans, or Americans. Yeah, but it's very rare to have someone from Saudi Arabia.
Yes, correct. Well, as I mentioned, I've been a long-term investor in KER and was involved with it for, like I said, almost 12 years, maybe a little longer. Our chairman ended up joining and investing in KER Mines back in 2013, I believe, is when he invested. I never met him until early 2016 was the first time I actually met him. But he actually became a significant investor in KER in 2012-2013 period.
Okay.
And then he got involved with the project through other people that were connected to the KER Mines story. And he came in, and the nice thing, which is unique, is he has a very successful built very successful businesses throughout the world. Actually, not only just Saudi Arabia, but throughout the world. He's an active investor in various mining companies and projects, and KER was an investment he made a few years back and has been super supportive of it over the years, including the 2016 period and recently with our financing, as well as moving forward. We had our AGM yesterday in Toronto. And he actually came to that for our AGM. He flew in for the day, so that way he can meet the investors that would show up. He's very supportive, and and has indicated his continued support for the company moving forward. He's obviously very pleased with the success we've had. He was at the mine last week and did an underground tour. So he's very happy with everything. We're all very happy.
Okay, cool. Let's just move forward in the presentation, I think. We touched on all these points, I think. Yeah.
Yeah, perfect. So this is just a summary of our capital structure. We have 235 million shares outstanding. There's fully diluted 265, but we've had a recent prices, and I think that's where we're trading today, is around 28 cents. So we have a market cap that's been fluctuating between 65 and 80 million, given depending on the day. The company is in solid financial, has a good solid financial position. The debt is held by myself and the chairman, which is good. There's no pressure on the company in terms of repayment or requiring, cash flow or investments to deal with that. Yes.
Let me dig in. So yes, I agree. But is this like a regular straight interest carrying loan, or is it a convertible debenture type of thing?
So the majority of the debt is at 8%. In fact, all the debt is at 8%, so it's not even a high interest loan. The interest is being accumulated; it's not being paid, and it will be paid once we get into cash flows, once we move to a production process. So that's the objective of the debt, is we put it aside so that way it's in a position of being to give the company the ample time to go and build the project properly. A portion of the debt does have a convertible feature, which I believe is at 90 cents or so. So,
okay.
yeah, so it's at around 90 cents or so. And so that again will be a process that is much further down the road. But again, my initial understanding and the understanding and discussions I've had with our chairman in terms of that little portion of the debt is that he's also more than happy to not convert if that is ultimately the best for the shareholders. Ultimately, he's a businessman. He understands what's going to be beneficial for the company. We've gone through a lot to put this company to where it is currently in terms of developing it. So he understands the importance of his role and the whole role of that situation.
Okay, I need to dig more into this because I really think it's interesting. So when did this start? Or in other words, when are the 3 years term is over? Is that 3 years from now or?
July 2019.
Okay, so and what you said is that the plan is to pay back the debt from the cash flow of the production. So the production decision, as you pointed out, will be made in the, let's say, first or second quarter 2018.
That is correct.
So you would reasonably assume that the company will be in full production, not in full, but in production and having cash flow 1 year later on.
Yeah, what is nice, and we'll see it later as we go through the presentation, because we're fully permitted and we have the extensive infrastructure, that accelerates the time frame for us to get into production, and it reduces our capex. It's very feasible for us because we are so far advanced. We're an advanced stage development company that we will be in production 9 to 12 months after we make the production decision, and the majority of that time is going to be the reality is, one of the things that people don't understand, and this is, it's funny because we've spent very little time marketing this company, and very few people truly understand what we have. But we have I believe it's about 3 kilometers of underground tunnels, of underground development that's already in place. In fact, a lot of the development actually brings us right to where the ore body is. So we can actually get into production. There's a couple areas. There's areas that I was underground last week that we're right where the ore body is. We can start mining there if we want to mine that area first. So the ability to get into production is actually quite is a huge benefit. The reality is the market, and a lot of people don't understand that, because this story, we purchased it in 2014, and really up until only a few months ago, no one even knew what we had. We hadn't even talked about it. So it's quite unique. And we're quite advanced. That's why we're so excited about this project from a move forward point of view, is that we have this existing resource and we have tremendous infrastructure. We have the permits. We don't have to jump through hoops. Everything is ready to go. And once we make that production decision, we're 9 to 12 months from being in production.
That's fast.
Well, it's only because of our situation. Yeah, we're very fortunate.
Sure,
and that's something that a lot of people need to really come to, when I speak to people and I show them the details and I go through everything and we look at the underground development, they don't realize, they're like, I can't believe this is all the utilities, all the infrastructure is in place, the ventilation is in place, the underground tunnels are there. And it's people are like, wow, this is unbelievable. And it's true. It's a great asset. It's a great property. That's one of the reasons why we bought it, was because there was $50 million worth of infrastructure that right now in our stock price, it's at zero. Once we make that production decision, this valuation has to come back to us because we don't have to invest it in capex.
Okay. No, that's, again, yeah, I hear that in these details, the first time, out of your mouth, and as you said, it's kind of really unique, and people maybe they read it, but they still don't get it, right? So it's and hopefully this is an opportunity for you to really educate people. Okay, no, it's really good. And by the way, I just see you have Sprott also as a shareholder, 8%. Is that Eric Sprott personally, or is it one of his investment vehicles?
Eric Sprott personally is invested. He's actually been a longer term investor in KER than I have. So he's been a long term investor in a company. supportive of the company. He's very obviously happy with the progress that we've made here in the short little while.
Okay. No, cool. So let's move forward.
Perfect. Okay, let me flip to the next page here. I'm getting used to this format, but I think I'm picking it up quickly. So this here is our, as I mentioned, I took the role on in April of 2017, and just as my own private businesses that I've built very successfully, I'm a big believer that in order to build a successful business, you have to build the right team around you, because one individual can't carry the ball for everybody. And I've gone out and I hired Martin Kostwick as our president. I retweaked the board of directors. We built a much stronger board of directors. Martin proceeded in bringing in Brad Atkinson as our director of exploration. And most importantly, well, not most importantly, but one of the people that we also brought in, who we are extremely fortunate to have, is one of our technical advisors, Michael Smith. He's our QP for the project also. But he was born in Arizona, went to Arizona State University, has worked in Arizona, and he's worked on the same geology that our mine is on. We're in a very unique geological area, and we'll get into that very shortly in terms of describing why we see so much potential. But Michael Smith has been an unbelievable value for us in terms of the knowledge and the understanding of the ore body. And that's one of the reasons why we've been able to move so quickly through this process in terms of gaining a knowledge of what the expectation is, as we're generally a pretty new group. But he has so much experience, and he's worked on a detachment fault system before, and so it's great.
Okay.
Unless you have any questions on that, I'm going to flip to the next page here.
Yep.
We've got so our company strategy. So when I started the process back in April, one of the things I set out was to create a strategy to create shareholder value. And what we needed to do was we needed to look at our asset. We wanted to go in, expand the current resources of the underground property, as well as define it for our production plan, as we have that milestone for the pre-feasibility study. But also we wanted to drill and expand some of the exploration targets. And one of the exploration targets was the footwall zone, the press release that came out yesterday, and we'll get into that shortly. But basically we implemented the phase 1 program. Phase 2 is under development. As I've mentioned already, the PFS, we're on track, and the infrastructure, this kind of summarizes everything. And our regional exploration, we have 5 additional exploration targets. And we'll get into those shortly. But ideally, the vision that I have, Michael, for this company over the next 2 to 5 years is to extend the mine life by expanding the ounces. I want to be able to increase our production profile, and I'll explain to you how I anticipate being able to do that, as well as obviously increasing, and this is all summarized through the expansion of our ounces on the resource. And that's, what we're on track for. And that's something that we believe is going to be something that our shareholders are going to be very proud of as we progress through these phase 1 and then phase 2 of our program. So that's ultimately my growth program moving forward. In terms of the infrastructure, I've mentioned it a couple times, and I think it's important to mention again, because it is such a key value play for us that it has not been recognized on this project. The underground mine development, the access, the utilities, the ventilation is all there. We have a mill, and here's you can see a picture of it here. We can see our crushing plant and the mill. We have a 450 ton per day processing plant. We have a tailings storage facility, capacity for the existing resources, all there, all permitted, as I mentioned already. We have power, and most importantly, and some people don't understand, we have water distribution. We're in Arizona, so when you think of Arizona, you think, boy, it's really hot, it's dry, it's desert. Yeah. Well, we have a water table, just at the bottom of the open pit. We actually are through a water table, so we actually have enough water produced by the mine, so that way we can run the whole process. It's actually a fantastic balance that we have there. Because water can be very expensive in the process, and we don't have to worry about that. We have surface buildings, assay labs, all in place, roads, access to our exploration sites, so it's very easy. We don't have to go through climbing mountains with billy goats to get to our production exploration target. All of this, as I mentioned, because we're permitted, that's gonna accelerate that time frame and reduce the capex, and that's what's going to increase our IRR for this project, as well as allow us to achieve those objectives of getting into production after the production decision of 9 to 12 months, because of all the pluses that we already have. All the boxes are checked already, so to speak.
Okay.
And then just moving slightly forward there, here's just a quick little summary, exactly what you mentioned. We have a measured and indicated of 300, just over 300,000. There's also an inferred resource there of 132,000. So as a global, we have 450,000 ounces. But primarily we just speak about the measured and indicated, the 300,000 as a nice base. The objective of the drilling program, phase 1 and phase 2, is to convert some of the inferred to measured and indicated, to continue to increase the confidence of the resource and increase the continuity of the resource, which is quite important for us. So that's our historical resource. We have a timeline and some of the near-term catalysts, Michael, that we see happening here. Obviously, all of our permitting and phase 1 drilling program is in play. Phase 1 should be complete end of November, early December. We'll have the phase 1 of the program complete. Phase 2 is a program that we'd like to be able to roll into, and hopefully we can start that towards the beginning to mid-December. We'll be able to start that program. The PFS, we've already have a firm hired they're already in progress of developing the PFS, so that way we can have it for end of Q1, and then we'll make our production decision. And I think that will be a very important catalyst moving forward. And then ultimately we just progress through production. And as you can see from our timeline chart, we kind of show it as, end of Q4. If we make a production decision, end of Q1, early 2019, I believe, if not Q1, Q2 of 2019, we'll be in. We have an opportunity to be in production, which is quite important for us.
Yeah, quite fast. And so is one of the plans, besides if you're in production, if you have cash flow, you're going to repay the debt, as we discussed, but are you going to fund further exploration from the cash flow instead of diluting the shareholders by raising more money?
Yeah, that's a good. Obviously we want to get into phase 2 of the program, and so that'll be coming up, and more information will come to we'll be able to make some more information available to everyone shortly on phase 2. But once we make the production decision, Michael, the point is exactly. We have already been approached by 3-4 different companies already that have offered the opportunity to provide the facilities to get us into production in terms of and we believe that at that point in time, we won't raise money for the CapEx portion of it. The CapEx is going to be, we have a budget of between 20 to 30 million to do the CapEx. That's all it's going to take. And, it's on the smaller scale, but we have firms that that this is right in their sweet spot. They like to do these type of smaller, debt structures. And, to be honest with you, they've also suggested, as all of them do, that's when we could also look at our debt structure and make sure that it works for the shareholders. We have to make sure that this company is solid. We're not doing all of this work to put the company in a negative situation. It doesn't make a lot of sense, right?
Sure.
But you're right. And then here, we'll just talk a little bit here about sort of the scale potential of our project, and one of the reasons why. One of the reasons why we bought this project, Michael, and I'm fortunate enough to have been involved in the process when we did acquire Copperstone. I was, obviously I wasn't on the management at the time, but I was a significant shareholder, so I was brought into the process. But we're located in what's called a detachment fault region, and I'll describe that a little bit. But the key thing about a detachment fault region, and I'll show you, if you look at the chart on the right here, if you can see my little clicker here, the chart on the right, this was actually a diagram. They actually used our project as a model for describing these detachment faults. And so what you've got here is you can actually see the Copperstone, the open pit. This was a document that was released in January of 2005. You have the open pit, and then way to your left, or the southwest of that open pit, we have, we have the Moon Mountain Detachment Fault right over here, the Moon Mountain Detachment Fault. And this fault runs from the mountain. You can actually go to the mountain, and you can see the detachment fault, but it runs all the way underneath this property. And the way that these detachment faults form is that you get these listric faults that come up multiple times. And many of these faults are mineralized. Some of them are not, but many of them are mineralized. The Copperstone was discovered because it outcropped to the surface back in the day. So that's why Copperstone was how Copperstone was discovered. It was originally mined as an open pit, as you can see, because mineralization had gone up. But over the course of the years with drilling, they had drilled in and they had made positive intercepts on what we call the footwall zone, which is a parallel structure to the Copperstone. And it's similar in geology, inclination, attitude. Everything is similar from a geology point of view. And so the press release you saw yesterday, you know, the footwall was always a theory, a target with some drilling. And one of the things that we wanted to do, because no one had really ever done it in the past, was we wanted to piece it together, have our geology team verify it, do the QA, QC review on it, make sure, you know, we can verify. We wanted to package it up. And that allowed us to develop the model to predict where the mineralization would be. And that's why we did our drilling. We intercepted the areas, and it allowed us to create an area, a 500 by 800 foot area, and we'll get into it a little bit later, that showed the continuous mineralization. So we were able to sort of confidently confirm this new zone. It's no longer a theory. It's no longer a target. It's a zone that we're going to continue to focus on to grow our ounces. On the left-hand side here, you have sort of this, where these detachment faults, and this is directly from the U.S. Geological Service. They actually produce this. These red little squiggly lines are known detachment faults, and they run, you know, sort of from the southeast of Arizona all the way through. This is the Copperstone area. We're right in the middle of the heart of the detachment. It comes through California and just to the south of Nevada. These little green dots are known mineralized detachment faults. And if you look at Copperstone, you see we are right in the heart of where a lot of the mineralization. There are other mines that have been mineralized. It's not only gold. Some of them are other base metals have been formed. So it's not only gold, but we're fortunately in a gold one. And so one of the reasons why we like it is because of these multiple faults that run parallel to the Copperstone, and I'll show that very shortly, so you can see how this property can grow from a scale potential. Mm-hmm. So let's we'll scroll down just a little bit here, and we'll talk and we'll get into our project. So when we created phase 1 of the drill program, we had specific objectives for the Copperstone as well as the footwall target, because initially when we were creating it, we still viewed it as a target. It was an exploration target that we needed to establish. So the Copperstone zone, we wanted to establish continuity of the resource and enhance the resource confidence. We wanted to do some expansion of the resource along strike, along with infill and down dip targets. So this was stuff that we felt our geology team. Sorry, I'm going to take you back one slide so that way you can understand what I'm referring to specifically here. If I'm able to get this page up. So the detachment fault here at the bottom. This is the source of the mineralization. So all the geologists, you know, the fluid came up into these faults, and that's how these faults became mineralized. So our geologists and all the previous geologists that looked at this project on behalf of Kerr when we were doing our due diligence back in 2014 said that this ore body is completely open down dip and you know, all the way down, because that's where the source is. So, you know, doing down dip extension testing was something that was very important to us. So what have we observed so far? One, we've enhanced the continuity of the Copperstone. We've confirmed the reliability of the previous drill results. Very important check mark for us, especially when you take over a project that has previous drilling, you want to make sure that that drilling is accurate, that it was done properly, there's proper procedures in place, and our team has gone through that process. In addition, we've expanded the resource and we've achieved not only down dip extension, but also up dip extension, which we're very excited about, and you know, which is quite a positive. This up dip extension was something that you know, our model was predictive, and it was great to see. In terms of the footwall target, you know, one of the things we wanted to do was define and validate the footwall as a new gold zone. That was something that was one of the overriding objectives. We needed to understand this ore body that had, you know, successful drilling in us. Can we establish this as a gold zone? Secondly, we wanted to establish some zones of mineralization. We felt we wanted to sort of target roughly 1,500 feet along strike. The Copperstone zone, this parallel footwall target, is directly 500 feet to the west and directly underneath the Copperstone. So the Copperstone is 5,000 feet as a strike length. It's a significant strike length. So we wanted to just say, can we establish roughly 1,500 feet along strike and 600 feet along dip? So what have we done so far? We've successfully established the new footwall zone. That was our press release. We have the press release identified. We have a 500, so we're not at 1,500 feet yet, but we still got lots of work to do to get there. But what we did do is we established that the zone is at least 800 feet deep, which is greater than our initial target. We thought was only going to be 600, but we've actually grown it to 800 feet. So we have a 500 by 800 foot block that we're able to start working on. And so, and the nice thing is that it's continued to demonstrate the identical geology of the previous successful Copperstone ore body. That is a known entity. So this is quite exciting for us as we continue to move forward. And here we'll be able to now look at our project here in a little bit more detail, Michael. So here's a good depiction of the Copperstone mine, historical production of over 500,000 ounces through the open pit. You know, we talked about sort of the objectives that we were doing. The ore body, so here what you got here is, this is the outline of the open pit. And right underneath that is our ore body, the depiction of the ore body from the previous drilling. On the right-hand side here, we have, so you see these purple lines? These purple lines represent all the development that's all in place already throughout this zone. This is called the D zone over here. Okay. So our ore body, we label it as a D zone. This is a C zone. We have a B zone and an A zone that we basically have. Our strike length is 5,000 feet, and we're showing that basically to depth of around 1,000 feet, we have hit historical drill intercepts. But all the, a lot of the underground drilling program is being done right through our D zone. We're doing definition drilling, so that way we can create our mine plan, you know, and that way then we can look at creating our 3-4 years of ore ahead of us. So that way when we make the production decision, we have the proper mine planning to go do that. So this is basically a good depiction of the ore body. As we progress, I'll take you through to the footwall. So this was the press release, details of the press release that came out yesterday. So one of the things, again, you've got the depiction of the open pit. The blue just represents where, in relation to the footwall, we have the Copperstone. And then over here, we have the footwall target. And, you know, we sort of have this 500 by 800 foot area across. And yesterday, we also showed in the press release kind of a bird's eye. If you overlaid it, you know, on the pit, where it was located in respect to the Copperstone zone under the pit. So here we've been able to tie this zone together. We've been able to go through the QA, QC, verify the previous drill results, package it together, develop the predictive model as to where we should be drilling, and then progress to try to tie the zones together. And that's what we've been able to accomplish. And that's why we're confident now moving forward as to be able to identify it as a mineralized zone in this footwall area. So we're very, very pleased. So we sort of moved it outside of the target zone, and now we've got it as an actual area where we can begin the process of, with further drilling, defining and delineating an additional resource and adding to our resources. So we're quite, as you can imagine, we're quite excited.
Quite pleased, yep.
So let's look at sort of one of the key things in terms of the project. You know, when we bought it, all of our geologists were telling us that not only did we have the copperstone, but they indicated that, you know, you've got this footwall target, you've got this south target, you've got this southwest target, you've got 3 or 4 areas on here that have previous successful drilling, and they're all looking from a geology point of view to be mineralized, potential mineralized faults. And they've all indicated that there's a strong belief that you know, getting to 1 million ounces on this project is just a starter. A lot of them believe that this is actually a 1 to 3 million ounce project because of all the exploration targets that we were sort of focused in on at the time. That, you know, with here's basically our existing resource. These black lines are the underground development. All those tunnels that I said are already in place, which is great. We have the footwall zone that now is been identified as an area that we're going to continue to grow. It's only 500 feet to the west. You'll notice this underground development. This underground development is literally, we can pop right into that footwall zone. So when you think about it from a cost point of view, as we continue to develop the footwall zone, you know, what was my one of my growth visions, Michael, I mentioned earlier. I wanted to expand the ounces, which the footwall gives us that opportunity. I wanted to increase our production profile. Michael, a lot of the areas in the footwall, we can are actually closer to the underground development than the far ends of the copperstone. So, you know, over the course of the next 2 to 5 years, we could be mining in the footwall. It's because we have so much development. Not only that, you know, when you are at the base of the pit, you can just drive an attic from the base of the pit to get into it, which is quite fantastic. The other thing that we have, Michael, is we have a south target. This south target is located 200 meters, 600 feet, to the south of the end of the open pit. Again, it's an area that has previous successful drilling. We've had good intercepts, as you can see. There's between 8 grams to over an ounce, over 6 to 12 feet, you know, in all of these targets. And ultimately, if we're able to establish this as another zone, we can actually access it through an underground attic from the base of the south end of the pit. We're only 200 meters away, and then we're into the ore body, which is quite unique. Again, we have effectively 3 mining areas that are very closely spaced together, that over the course of the next 2 to 5 years, we may be able to bring these all into a process where now we can, with expansion of our mill, we're able to expand our our production profile too, which is great. The other target that we have that I think our geology team is super excited about is the southwest target, because the southwest target is only 3,000 feet away. But what they're seeing in the southwest target from a geological point of view is it's very similar to the D zone in terms of the limestone replacement. There's a lot of limestone here and there's a lot of limestone up here. And what we're seeing here with the limestone and all that stuff is you're getting a significant amount of grade. Some of the hits that we've had in the southwest are these ones here, kind of the half ounce hits that we have in the southwest target. So it gives us another excellent prospective area to develop. So that's another one of the future targets that we have, you know, down the road. And you're right. Once we move into cash flows and production, you know, we're obviously the debt, but a couple years down the road, you know, 2-3 years down the road, when we're generating, we have excess cash. You're right. I don't need to dilute. I can go drill into these areas.
Let me ask you a question, Claudio. How afraid are you that the market will not allow you to bring all your plans into reality, but that someone is just kind of buying the whole thing?
You know, as a junior, you know, I've been to a lot of presentations, and I've read a lot of articles over the past probably 3 to 5 months regarding sort of the mid-tiers and the senior producers, you know, and their desire for a lot of juniors like us to bring projects to the market. Everybody is finding new discoveries is becoming a real challenge, and we have a very exciting project that I can tell you is on the radar screen. There's no question about that. So will I be allowed to bring my project in, you know, and achieve my vision? You know, obviously I hope so, But, you know, at the end of the day, as the CEO of the company, I have to do what's best for the shareholders. If someone recognizes the potential of this project and feel that, you know, they want to come and buy us and make an offer, well, I can't stop them from doing that. It will be up to us and our shareholder group to decide if that's the right direction. And if everybody agrees that that's the right direction, then that is the right direction. But, you know, I believe as we continue to move this thing forward, I think more and more eyeballs from the mid-tiers and the senior groups will be knocking on our door as a potential asset. Remember, we're located in Arizona. You know, you look at so many of these unfortunate situations that are occurring in some of these more difficult regions around the world. You know, we have gold miners going into areas they spent a fortune developing projects, only to have the governments of these other countries put roadblocks or take the projects. And this year, we're in Arizona. We know the laws, so we're happy.
Okay, good.
So on the next page is additional. So this was a press release that we issued a couple weeks ago, if you recall. This is the additional exploration targets. So one of the things that we've identified, and again, this was brought to our attention a while back, but really very little work was put towards it. But a few weeks ago, we announced this in a press release. So I want to show you here. This is one of the geophysical maps that was produced for the project. I want to show you here these. Look specifically at these blue things. So right here is a blue low magnetic low. Sorry, that's not really very good grammar there. But anyways, a magnetic low. Here is in this box is the Copperstone mine on this magnetic low. We have another magnetic low down here. This box here is the southwest target. Well, up here we have magnetic low, and magnetic low, which looks and appears like it is also over top of a mineralized another fault. And when you look at the scale of these, we call them the blue pearls. We've become better at now naming things as opposed to south and southwest targets. We're becoming creative. So these are called the blue pearls. So we're getting better as we progress here. But we have three areas, and when you look at the boxes, what we've tried to do is show the scale. Each one of these boxes is the same size of the Copperstone mine. So here you have roughly 800,000 ounces because the open pit and our existing resource, you've got a minimum of 800,000, and we obviously know that or believe that there's an opportunity to grow that. But now you look at these boxes. You've got 1, 2, 3, 4 boxes that are all similar. Again, so this is another long-term opportunity for us to continue to grow this resource. And it lines up with a system of, I've had now 5 different geologists that have looked at our project, that have done, provided their opinion, and they're all in the same boat in terms of the number of potential opportunities that exist on this project. So, they're all obviously very early stage, but, for us, what's important is that we know that not only do we have Copperstone, and now we've developed this footwall, which is just right next to the Copperstone, but holy smokes, we've got this target, we've got these targets. The south target is right here. This is the south target. Funny enough, it's right here. So we've got all these additional opportunities available to us as we move forward, and it gives us, greater growth expansion and growth opportunity.
Okay.
When you look at our peer group, I feel we have good value for our company still. At the 28 cents, we have a market cap of 66 million, which we've talked about. And when you start to look at some of the peer group that we're in, you can see we still have a good re-rating opportunity as we continue to demonstrate the project, what it's all about. So we're for many investors that we've talked to over the last few months, they're all very excited because they see this as a very early play. Even though we're an advanced stage project, because not a lot of people are familiar with our project, they see us as a very good early term play over the next 2 to 3 years of really being in a position to take part in a very exciting story as it unfolds.
That the market gives the company is kind of a, let's say, early exploration, while in reality, yeah, you're only kind of that far away from production, yeah, with still having all these exploration upside later on down the road, right?
You summed it up exactly right. We are viewed, we're lower, our valuation is lower than many exploration companies that don't have anything compared to us. We are light years ahead of so many companies that have valuations that are 50% higher than us. Makes no sense to me, but that's the market. And eventually the market will recognize what we are, because we are in that process of getting our name out and getting the story in front of people. And we've been doing that quite successfully. So I think it's just a matter of time until our story becomes something that people say, boy, this is a good project. And you know, we'll keep working hard. We've got to build our story. We've got to build our project. We've got to build the business, and the stock and the story will take care of itself. You know, I'm a big believer in that. It's just going to be a matter of time. But you're exactly right. I'm invested personally with a lot of exploration companies, and the valuations are higher than Kerr Mines. So we're so far ahead of them, but there's not that unfortunately I don't have any control over. I'm working hard to try to get the story out, and you know, Michael, thank you very much for for taking part in this process of helping me share the news of this wonderful project.
Yeah. Not a big believer that action speaks louder than words, and that the market valuation will, as you said, will catch up one point in time. And yes, of course, you can kind of push it a little bit, yeah, but at the end, the results that you and the team are able to deliver will be rewarded in the market sooner or later, right? That's, I think, what always happens. The market is the market. You can't just force it.
All right, maybe you're right, and I hear what you're saying exactly. I think it's just going to be a matter of time, and everything will catch up. And for people that do a little bit of their due diligence now, we'll be very, very pleased with their decisions in terms of our project. There's no question about that.
Okay, so thank you very much for taking the time. I trust that most of the information is available on your website, which is kerrmines.com, right? And yeah, that people can also contact you or your team, yeah, if they have any specific questions. And yeah, as I said, and as I said, I did my first buy recommendation on the stock yesterday. Yeah, a little bit late, but I got a good price. So now I'm even more convinced, yeah, after listening to what you have been just able to present to me, I'm even more convinced that this will be a success for all of my viewers, subscribers, yeah, all the investors that follow me. And of course, I'm going to continue covering the story in my outlets. And maybe, yeah, whenever you have the next bigger news release, yeah, some developments, we can hook up again on a video, if that's okay for you, Claudio.
That would be fantastic. And now I know how it works. So okay, I'm more educated.
All good.
That's
all
perfect,
good.
Mike.
Okay, so first of all,
thank you.
Yeah, thank you very much. Bye-bye.